Barcelona. Well, moving on, it's not short of news flow today.
Absolutely.
Lots going on. Very important discussion lined up. We have Rajat Kathuria, CEO of Signature Global, and Amit Kumar Sinha, MD and CEO of Mahindra Lifespace Developers, who join us now. Thank you so much, gentlemen, for joining us. I'm sure you're rejoicing given the kind of liquidity gush you've received from Mint Street. Mr. Amit, you've been a regular on the show. First up, decode this particular move for us. What does this mean for a home buyer?
Well, this is a great news for home buyers. In fact, it's great news for consumers all across. I'm hoping the low repo rates will be passed on to consumers by all the banks. That's the key assumption, and that has happened before. So what happens is whenever you have low rates, it stimulates GDP in multiple ways because people look at EMI coming down, their auto, housing, many of the other consumer durables, the EMI and the outflow comes down significantly, and it stimulates their purchasing, their spending even more. So overall, it's good for the economy. So from a consumer point of view, it's a great news. I heard you talk about the insurance going up. Hopefully, this will counterbalance some of the pain they may have on the insurance side, having a lower EMI. So great news on the consumer side. But on the other side, from a corporate perspective, like as a corporate for us, I think the rates coming down has a huge improvement for us on the balance sheet side. Our debt burden, some of us has a healthy debt to equity ratio, but the liquidity will improve, the interest rates will come down, the interest payout will come down significantly. And that allows us to do more. We can do more capital allocation toward projects that have higher returns. And that same applies to the other industrial clients also. Like I have an industrial business and many of the clients are looking for expansion. They say when the burden comes down, they'll say, hey, this is an opportunity for us to do more capital allocation, more capex towards growth. So overall, from a consumer point of view, from a corporate point of view, as well as from a industrial investment point of view, this is a great news for all of us.
Well, thank you so much for that, Mr. Sinha. But moving on to then Mr. Kathuria, because you have a very strong presence in the affordable as well as the mid-income segment, and this is one part of the real estate market, especially the lower end of the market, that was not doing so well. Now we've had 3 rate cuts so far this year. How have the earlier 2 rate cuts impacted your demand thus far? And with this rate cut now coming in, how do you see demand panning out going forward?
Yeah, Vamakshi, thanks for inviting us to your show. So, I'll start with a very motherhood statement that, real estate is a very capital-hungry sector, and financing cost tends to be very critical either for the developer or for the home buyer. And if you'll see, as a country, we are still at a very nascent stage in terms of supply creation, in the housing space. Top 7 to 8 cities, we are still, after two to three good years, we're supplying about, let's say, 500,000 new homes as an economy. And if we compare that to, let's say, China, it will be probably doing 10 times more new homes after a fairly long and strong housing cycle. So, there's a lot of work which needs to be done in the space, and all these policy initiatives by the government, whether it is in terms of the earlier rate cuts, tax benefits in the last budget, and this, welcome surprise where it's actually a 50 basis points cut, is a big boost for the customer, which really sees a big impact on their affordability of homes. And I think it very positively impacts all product segments, whether it be affordable, mid-income, and even to that extent, premium housing space. So we are seeing a good, demand scenario in the market. This move should definitely have a positive bearing on it.
Rajat, can you quantify a few numbers for us? A 50 basis point rate cut by the RBI, assuming that transmission is done almost immediately. In terms of EMI burden for the customer, how much does that reduce by? And number 2, Amit did tell us that it improves the balance sheet as far as developers are concerned. So at what rate, would a developer like you, Rajat, actually, borrow from banks? And what will be the kind of positive impact it will have for you?
So as an industry, the balance sheet of multiple developers is much healthier than what it used to be 3 to 4 years ago. So if you look at top 8 or 10 housing companies in the country, if we were doing I'm giving ballparks here. Let's say, as an industry, if we were selling about 50 or 1,000 crores about 5 years ago, today that number's comfortably jumped to, let's say, 1.5 odd lakh crores of sales are happening. In addition, there have been a lot of equity infusions into the balance sheets by almost all developers. Net debt or debt levels are significantly lower. So availability of capital is not a challenge. Yes, any reduction in rate definitely reduces the interest burden, but the advantage is more for the consumer because see, we fortunately have like a 30-year product available today for the customer. It used to be 25 years, till few years ago, and maybe it used to be 20 years earlier. So 30 years like a long enough product. A half, 50 basis point cut, does move the needle in terms of the EMI payout.
Well, Mr. Sinha, my next question is for you. You have said that you will be exiting the affordable segment completely over the next 5 years. Given how the rate cuts have panned out, is there probably a rethink or a realignment of strategy for you going forward, or do you largely stick to the same?
So I think it's, first of all, the definition of affordable is very important for us. I think we will go away from the low end of the affordable segment. We'll continue to play the high end of the affordable segment, I think, is what we call mid-premium. We'll continue to play in that segment. And that's a healthy segment as you all have discussed. I think the rate cut will stimulate demand in that segment. So we are excited by it. And I think just to quantify this, 0.5%, 50 basis point will have either people keep the same EMI and reduce the duration, but many people will actually see a EMI come down by 3 to 5%, which is a meaningful reduction in the EMI. So that's very good for this segment. So overall, we will probably continue to exit the low end of the affordable segment that we call it, and then focus on mid-premium, premium, which are slightly better for the market we operate in.
Amit, both a qualitative as well as a quantitative question. First up, in past rate cut cycles, typically, when a rate cut of 50 basis points or a 25 basis points, do come about, what has been the subsequent increase in demand? And typically, you said that, most consumers go in for a lower EMI. Do they also go ahead and upscale in terms of the size of apartments or the area that they go ahead and buy?
Yeah, so let me take that question. I think there is, I wish there was a like-to-like correlation, but many times the rate cuts are not always linked to the launches that we have. But generally, what we have seen in the past is when the timing works perfectly, when there's something like this announcement happens and you have launch immediately happening, it just really create a huge amount of footfall for our projects. And as you know, we are focused on 3 major cities, Mumbai, Pune, Bangalore. In case of we had a previous rate cut, we saw a good amount of boost in the footfall for some of our Mumbai projects. So that was very helpful. My sense is that will continue to be there, and people will be very excited to take benefit from the rate cut that we are seeing. The sentiment changed completely. In terms of the upgrade question that you had, I think you are absolutely right. What we are seeing is it's not the per capita income that drives demand in this market in India. It's the per household income. It's not only you are contributing, your parents are contributing. Sometimes, parents, children are contributing. So multi-generational, decision making happens here, and they pull all the investment together. And so when you see that not only more than one person in the family is able to see the benefit of the rate cut, the upgrade desire actually is really can be fructified. So we do see a significant interest in people who say, oh, we're looking at a 2-bedroom apartment, can we go to a 3-bedroom or something like 2-bedroom large? So we do see an increase in appetite of people to see to explore larger upgrades as we look at it. And for Bombay, that is a huge thing. Go from 800 to 900 to 1,000. That's a big increase, and that helps developers from a ticket size point of view.
So demand is good. There's no complaining about that. This does, boost the sentiment. But Rajat, now coming to you, I just like to understand from you because, when we talk about the real estate cycle as a whole, there are several steps involved, right? You have the land, then you, of course, go ahead with the RERA approvals, and then you go for the launch. So my question is, how long will it take for the affordable inventory to now come in for the industry as a whole, because supply has not come through as much as expected for at least the lower end of the market?
Amakshi, we as a company, we started with affordable housing, and we've probably done, in terms of volume, probably the largest number of affordable housing units in the country. In the first 5 years of our initiation, we probably did close to 20,000 units in the affordable category, and this was like absolutely pure affordable, like homes coming in the range of 25 to 30 lakhs. Post 2020, and just to add on, the affordable housing, we used to do it like within the city limits, not going too far away from the city, and hence, calling the project affordable, because land prices there tend to be quite low. Over the last 2-3 years, however, there's been a reasonable spike in the land prices in the city limits. At least, in the area we operate, the land prices have gone up, and hence it has made hardcore affordable housing a little unviable for developers. So last couple of years, we've been focusing on mid-income segment. Definitions could vary, but the way Amit was saying that, the upper end of affordable is what they are focusing on. Likewise, we call ourselves more mid-income, but this is a fairly wide spectrum of mid-income, houses starting at about, let's say, 1.5 crores going up to about 4 odd crores. So, that's the spectrum we are playing in. But affordable housing supply is dependent on land cost, and at current land prices, a lot of supply in affordable segment looks tough, at least in the NCR market.
Thank you so much, Amit, as well as Rajat, for joining us, giving us a sense of how exactly the entire real estate space and investors should look at this particular rate cut coming in from the RBI. Clearly a positive sign, and the entire real estate pack. Actually, the entire week, in anticipation of a 25 basis point cut, the stocks have rallied. So 50 basis point cut is actually a cherry on the top, and that is what has caused the rally to extend even further. But with that, it's all the time we have on this edition of Mid Cap Radar. Your stocks when we return.